Let me ask you something. When you think about Indian taxes, what's the first thing that comes to mind? For a lot of people, it's their passport. But what if I told you that's not the whole story? Today, we're going to get into a core idea in Indian income tax that really trips people up. It's not about your citizenship, it's all about where you physically stay. So, let's break down how that actually works.
So let's just get right into it with the big one. If you have an Indian passport, does that automatically mean you owe taxes in India on everything you earn? And on the flip side, if you're a foreign citizen, are you just off the hook? You know, it's a really common assumption, but when you look at the Income Tax Act, things are a little bit different.
The real answer, the key that unlocks this whole thing, is this two-word phrase, residential status. This right here is the absolute cornerstone concept. It has pretty much nothing to do with what your passport says, and everything, and I mean everything, to do with how many days you actually spend in India.
Okay, so first things first, we've got to really pull apart this difference between residence and citizenship. Getting this distinction clear in your head is step one to making sense of the entire system.
Here's an easy way to think about it. Your citizenship, that's kind of permanent. It's a legal status that doesn't just change on a whim. But your residential status, for tax purposes, is totally fluid. It's calculated fresh every single financial year. You could be a resident this year and a non-resident next year, all while holding the same passport. It's basically your attendance record for the year that mattered.
All right, so we know the concept that matters, but who does it actually apply to? The Income Tax Act is very particular about this, and it uses a specific term to define who a taxpayer is.
And that official term is assessee. Now, it sounds super formal, I know, but the idea is actually pretty simple. An assessee is anyone or anything that can be assessed for tax. So we're not just talking about you and me here. This also covers companies, business firms, you name it.
Okay, now we're getting to the really practical part. How do you actually figure out your residential status? Well, it all boils down to counting the number of days you were in India during the financial year, and there are some very clear rules we have to follow. I want you to burn this number into your brain. 182. This is the magic number. It's the first and most important key to figuring out your residential status. If you remember one number from this whole explainer, make it this one.
So here's the deal. You only need to meet one of these two conditions to be considered a resident for tax purposes. Just one. The first one is super simple. Were you in India for 182 days or more? If yes, boom, you're a resident. Done. The second condition is kind of a backup plan. If your stay was shorter, say just 60 days, you might still be a resident if you also spent a lot of time here before, specifically 365 days over the last 4 years.
Now hold on, there's a really important exception here that you need to know about, especially if you're an Indian citizen working overseas. If you leave India for a job or you're part of a crew on an Indian ship, that 60-day rule we just talked about, it gets stretched all the way back up to 182 days. This is a huge deal for a lot of NRIs because it helps them maintain that non-resident status.
Okay, so you've done the math, you've counted the days, you've applied the conditions, so where does that leave you? Well, the law sorts every single taxpayer into one of 3 buckets, and each one has totally different tax rules. And here are the 3 big ones. First, you have the resident and ordinarily resident, or ROR for short. Then you've got resident but not ordinarily resident, which people call RNOR or just NOR. And finally, you have the non-resident, or NR. Trust me, finding out which of these you fall into is absolutely everything.
So the logic is actually pretty straightforward. If you looked at those 2 basic day counting rules and you didn't meet either of them, well, congratulations, you're a non-resident. It's that clear-cut. But if you met at least one of them, you are a resident. And from there, a couple more tests kick in to figure out if you're the ordinarily resident type or the not ordinarily resident type.
And this is where it all comes together. This is the so what moment. You've figured out your category, great, but why does it even matter? Well, this is where the rubber meets the road, because your status directly impacts which parts of your income are taxable in India.
Okay, this table lays it all out perfectly. Look at those first 2 rows. Any income you receive in India or that you earn in India is taxable for everybody. Doesn't matter what your status is. That's the baseline. But this is where it gets interesting. Look at that 3rd row. Income from a business that's controlled from India. That's taxable for residents but not for non-residents. And here's the absolute game changer. The last row, All other foreign income is only taxable for the resident and ordinarily resident. For everyone else, that income is out of India's tax reach. This right here is the whole point of figuring out your status.
So to boil it all down, think of your residential status as deciding how wide the tax net is. For a non-resident, that net is cast pretty narrowly. It only covers your Indian income. But for a resident and ordinarily resident, that net stretches all the way across the globe and pulls in your worldwide income. So let's do a quick lightning round recap. Number 1, it is all about residence, not your citizenship. Number 2, your residence is decided by a simple day count. And number 3, the category you land in, ROR, NOR, or NR, is what ultimately decides if your global income is on the table for Indian taxes.
And that pretty much covers the basics of who gets taxed and why. We've gone through the rules, we've seen the categories, and we've understood the impact. So it all leaves just one final question for you to think about. Now that you know the rules, where do you stand?